Hello again. Thanks for joining us on the Spencer Covey Show. Today we have Tim Streit with Grand Ventures. And we were just talking about how it's a very illustrious award to have the best venture capital firm in Grand Rapids.
That's right. I'm, in fact, the one of two, and I'm not sure we'd even be the number one because the other one is Wakestream, which is Rick DeVos. So
Oh, well, they don't count.
he might get the
Yeah,
credit for being a cooler and more influential venture fund. But we pack a lot of punch for a little fun. It's a lot of fun.
And how did you get started on such a thing?
Yeah, that's kind of an interesting story that we could probably spend like the whole hour on. But the semi-quick version of it, this actually goes back almost 20 years. So the interesting thing here for me is back in, I graduated from the University of Michigan in 2000, and I moved to Chicago, wound up, despite studying engineering, wound up in investment banking. And I did that for 3 years, and I was like, what am I doing with my life? I was working 80-hour weeks, and I was just burnt out. And so in 2003, it's like, maybe I'll go back to school. And I applied, actually it was the Harvard application. I never got into Harvard, but I applied three times. I applied 3 times, not just once. And the Harvard application, one of the questions was, who are your role models and what do you want to leave as your legacy in life? Mm-hmm. And at the point, I was just like, that's a great question and one that I haven't really even had time to think about because I've been working so much. So I thought about, well, if I could do it, and again, you're trying to get into Harvard, so you're trying to think big. Like if I could do anything, and I was pretty convinced I wasn't a finance person, but I was from Michigan. My family, I grew up in the suburbs of Detroit. Grandfather's a Lutheran pastor, parents were both teachers. So I looked at it and said, well, my role models were their legacy was leaving society as a better place. I thought, well, what would that look like for me? Because I thought about being a teacher, but I also like the fast pace of business and the impact that you can have in business. So I kind of came up with venture capital as my answer to the Harvard application. And the essay basically said, I'm going back to school to acquire the skills and network to start a venture fund in Michigan. This is back when the brain drain was going on. People were leaving. Nobody wanted to live, especially in Detroit.
06, something.
Well, I graduated in 2000, so this was 2003 when I first wrote this thesis or this essay. And so I'm going back to school to acquire the skills and the network to come back to Michigan someday and to launch a venture fund that's going to create the next generation of Michigan jobs.
Neat.
It's like, wouldn't that be cool if I could be help establish the next generation of companies and jobs, and which creates community and wealth and sustainability. So it started off as like this kind of, it started off as a business school application, but I grew up in a family where if you can dream it, you can do it. Mm-hmm. So I was like, I'm going to do this someday. I'm like, let's be clear. I'm like 25 or 26 at the time, so I had no business doing this, but I was naive enough to be like, yeah, I'm going to launch a venture fund. And so I kind of had my eyes on it. I didn't do it at the time, but the idea just kind of stuck. So fast forward, 2006, I got my break into venture capital. My first venture job was at a big bank, and I was in a corporate venture role. Okay. And then at the end of 2009 or 10, I finally said, if I'm ever going to do it, now's the time. So at the end of 2009, I resigned from HSBC, and I moved back to Michigan to start the fund.
So is there a lot that you learned at HSBC that translated over to?
Yes and no.
Venture?
So HSBC, having been in kind of
that's not really venture. Yeah. That's probably more capital allocation.
Well, two things. So having been the first 6 years in more like corporate finance and M&A, I'd learned how to work really hard. I learned how to build a great financial model. Sure. But I'd never been an operator. Interestingly, venture capital is different. When you think of private equity, there's a lot of financial engineering and a lot of math and modeling that goes into it. That's true of venture capital, but a lot of venture capitalists, probably the majority, actually come from operations. It was a former founder that launched and sold a couple of businesses, and then they said, I think I want to go to the other side and help the next generation of entrepreneurs. So what I learned at HSBC, I was actually in sort of a new products role, which actually from anybody out of corporate is interesting. If you're in a business that's trying to figure out how to innovate and what the future looks like, that's sort of what I was for HSBC. And so they said, I actually had 2 business cards. One said new products and the other one said new ventures. And so we were like the weird skunk tank, like trying to think well, what's the next big thing? And then we were trying to build it. And the venture arm existed solely to invest in startups that could help us to realize our own product vision. So that was sort of like
Okay.
my,
So it really
my
was
entrepreneurial.
startups.
Yeah, it was.
You're
it
not
was,
doing like acquisitions and stuff.
No,
You're doing-
and we actually only did 2 deals. I spent the bulk of that 4 years actually building payment and marketing technologies for HSBC.
Neat.
So that was super cool. But the interesting thing was, I did it just long enough to be like, all right, I love early stage businesses where it's like there's less known factors. You're sort of creating the future. I love working with startups. I love the part that I thought I'd love was there. I love working with entrepreneurs to help them be successful. That was absolutely like my motive. That was the original dream, right? I want to help. I want to help others. I want to create a legacy. But what I didn't get a taste of is HSBC is the world's largest bank.
Yeah.
So I happen to have, a $2 trillion balance sheet or whatever it was sitting behind me. I mean, I don't even know what the number was, but we had the benefits of a really big firm. So the biggest learning thing when I came back to start was I had the vision. I kind of knew what venture capital was. I knew I wanted to do it. But when I came back, I don't come from money. I come from a family of teachers and pastors.
Mm-hmm.
And there's 2 words in venture. I had the venture part nailed. Like, we're going to build ventures. I didn't have the first clue about the capital part.
Capital part.
So coming back, like that was the big punch in the nose. It's like, before you can do the fun stuff, you need to raise the capital.
Yeah, you need to earn $1 to spend $1.
Yeah. So that was the biggest shift. So HSBC really prepped me in terms of like confirming what I wanted to do, getting exposed to the operations side, the investing side, and the mentoring side of venture capital. But it was still, I'd like to tell the story because like others that are entrepreneurs, like even VCs, there's a stage where we're startups too.
Right.
So I mean, you met me first in like those first 3 years.
Yeah.
Where I was just trying to like keep it together, and it was like 3 years of hustle to try to get that first venture fund started.
Yeah.
And so HSBC prepped me, but then there was still a lot of like trial by fire.
So what were your greatest lessons in that trial by fire?
Yeah, I tell some of this to just encourage people, like, actually I think it was even from business school that taught about it. But like, if you have an idea, for one, if you keep it to yourself, it's never going to go anywhere. It'll just be an idea inside your head. So you have to socialize. So from 2003 until 2000.
So don't be scared to share your ideas.
Yeah, don't be scared to share ideas. Of course, if people are worried, it's proprietary. I don't want to tell people. It's like, that's fine, but it's going to die as an idea inside your head if you don't share it with others.
It's so difficult to do anything. I mean, let alone if you have a good idea.
Right? So I was the crazy one from 2000, because the thing is, like, you need to get the feedback, but also you need to see if you can build a tribe. And so I was the one from 2003 to 10, while still in Chicago. I'm like, I'm going back to Michigan to start a venture fund. And most people are like, you know, especially given the economy at the time, like, are you crazy?
What?
Why in the world would you go back to Michigan? Like, that's the dumbest idea I've ever heard, Tim. People thought I was crazy. So, so I think there's a lesson there about, like, obviously you can't chase every dream, but you should listen to your dreams. And so, like,
So what made you think it was in the face of adversity? What gave you that confidence that it was a good idea? I mean, you're obviously worked out, so it was.
Yeah, it's working out really well. What I'd say is there's a lot of encouragement. So, like, as I talk to people are like, I don't know if you can do it, but that would be so cool if you did. There's sort of universal support.
Mm-hmm.
Like, we need more people like you, Tim, coming back to Michigan. So I knew there was an interest in it, sort of from investors anyways. I'd seen by doing it at HSBC and kind of practicing it that we can actually have like a real, not only can we invest in companies, but we can have a real impact on helping them to be successful. So we knew that was real. And then also, if you look across the industry, like what we've done in Michigan and now the Midwest, and now we're playing even broad, we have companies in Toronto now.
Oh, neat.
This is a playbook that has worked in lots of geographies. Like, it starts with one fund and with a handful of startups. And there's, it's like Skunk Works, and then one of them works, and then you have one big exit, and that creates 10 more companies, and those 10 companies create 100 more companies. And eventually you're talking about, hundreds of companies and thousands and thousands of jobs.
Ecosystem.
Yeah. So there's, when you research it, you realize, like, it started off as sort of a passion project, but then as you research it, you start to realize, like, the time was right for Michigan. We had the right ingredients. We had access to great universities, which means access to young talent, corporates, et cetera.
knowledge transfer, possibly.
Knowledge transfer, yeah, ability to recruit and retain talent, all those great things.
Mhm.
So
Maybe we should pause on knowledge transfer real quick. I'm not sure everybody knows what that is. Just the way that professors can create ideas and then sell them essentially to operators and capitalists.
So I was thinking about twofold, but that brings up a great point. So I was thinking about knowledge transfer in terms of just there's knowledge in the community, and a lot, if you're trying to sell into the automotive industry, but you're a kind of a tech startup, you can absorb a lot of that knowledge from the people around you, from the community, from executives, et cetera. And then also, especially if you're talking about students, if you combine, academia or industry knowledge with younger students, a lot of times it's just like a sponge. They're going to absorb the ideas and really be able to take it to the next. Actually, that's kind of the magic, is you get like the younger entrepreneur that's sprinting fast and working on like the latest, greatest technologies, and you impart in them the wisdom of a 30-year operating executive, is when really interesting things start to happen.
At the same time, like in...
Yeah. Well,
so let's say I'm
depends
like,
on how you do it.
so let's say I'm like 6 months into an idea about cutting edge technology, let's just say.
Yeah.
You would recommend me pairing up at that point, in that first couple months, with like a 30-year operator? Is that...
I'd say a little bit like me. You asked, like, how did I know it was going to work?
Yeah.
You need to always be talking to your customers, and you need to understand your market. So in my case, I was talking to entrepreneurs and to potential investors, and people are like, the entrepreneurs are like, oh yeah, we could really use the help. I need the capital, but I need more. I need advice. I need people to open doors. And from investors, they're like, I love the mission of what you're doing, and there's a little more skepticism, but I could see that, well, if I could achieve the mission while also generating a return, I think they'd be there. So what I'd say is, any entrepreneur or innovator, I just would always encourage people to talk to if you aren't talking to your customer, if you don't really know your market, you're sort of groping in the blind, and that's never a good place to be.
Depends on
right?
where you're at.
Yeah. So I think, I think it's sound wisdom where it goes. Now, if you're a new technology, I'm not saying you bring in a 60-year-old retired auto executive as a co-founder, but maybe as an advisor. You have like an industry advisory panel, or if you're building something again that's going to sell into the automotive industry, before you have a product, you're socializing the idea, the value proposition before you go to that market. So hey, does this matter? Is it listening? Am I addressing it the right way? Are they open to change? So that's more what I'm getting at, is there's lots of ways that you can do knowledge transfer.
Sounds like an official mentor.
Yeah.
Sounds like a...
Yeah, it could be a mentor, it could be kind of an advisory board. Sometimes you want those folks. I actually, the surprise, what do you think is the average age of startup entrepreneur or startup CEO?
I'm just going to say 30.
Yeah, you would think, and I meet lots of 20-year-old founders, the average age is actually over 40. It's like 42.
Really?
Which means if you average it out, the 30-year-olds, there must be 50 and 60-year-olds in there too.
Oh, sure.
So it's surprising.
First time?
Well, not first time. I just mean in terms of you meet a company. If I look at all the companies I talk to, their founders on average are probably close to 40 years old.
Okay.
It's going to vary by cohort, what sector, what geography, et cetera. But it's just surprising. Startups, innovation, entrepreneurship is not just for 20-something-year-olds.
Sure. Yeah. So the credibility and knowing that you've got a good idea, or at least being surrounded by people that tell you have a good idea, that seems to be kind of like the first step.
Yeah.
Where you've got something, you know what you're talking about, and you can get some people to follow you, essentially, be it as an advisory role, or even probably co-founder or technical support, something like that. But I think that a lot of people that aren't there see that as kind of almost like a chicken and the egg issue, where it's like, I want to be there, but I don't know how to get there. What advice would you have for somebody that's at that business model canvas stage where they don't have anything other than an idea? What's the first step that you would recommend somebody take as a pitch contestant? Or I guess maybe I'm answering a question, but...
Yeah, I usually meet companies later than that, where we typically
Okay.
engage is like there's a product, there's revenue. We talk to pre-revenue companies. Nowadays most venture, because the angel groups are doing a great job and there's tons of accelerators, by the time companies pitch me, usually they've got a product.
They've got an accelerator behind them.
I think it is like, business model canvas or type of thing. Step one is, what's the program they go through? It's like 100 customer interviews.
Mm-hmm.
So the closest you can get before you build anything is, you're going to go out and get a ton of market feedback. When the top things that we look for in a company, so I'll tell you like this: the top things that we look for in a company are market and team.
Mm-hmm.
Interestingly, which one do you think is more important, the market or the team?
I'm gonna go with team.
Good answer.
Not right?
It's a fine answer.
Yeah.
It goes back and forth. Actually, I just asked my team this yesterday, and like 5 out of 7 said team, and I'm like, no, it's market.
Okay.
So I don't have a strong bias. I would probably default towards team, but I heard this from another super successful venture capitalist, and they did this question amongst their team, and with the answer was, you can take the best founder in the world and put him into a bad market. He's not going to build a big business if you don't have the right market conditions, people that are ready for the technology, et cetera. If you put a great founder into a great market, you could build a $10 billion business.
Sure.
So, but the reality is, if it's not a great team, they won't do it anyways. So anyways, those are the top 2 things we look for, are market and team. And then as soon as just to say, like, the customer feedback, understanding your market and what you want to deliver to them is probably the most important thing. Is, hey, could this become really big? Do I have the team to execute on it? But very soon, again, we invest in software. So you don't need like a $100 million production line to do what our companies do.
Right.
But usually what you say is, again, this is like lean canvas, lean startup stuff. It's like, build a prototype. And actually that could go for anything, like 3D print, a prototype, or in our case, it's like build an MVP.
Minimum viable product.
Build a minimum viable product. Just, see if it can be built, and then put it in front of somebody. So first you talk to them about it, and like, okay, do you build the MVP? Try this out. What do you think? They still like it. What would you like to see different? So don't wait too long to build. A lot of the best entrepreneurs, once they have conviction about a product or an idea, they start to build it.
Yeah. They almost can't be helped.
Yeah, they almost You're going to need to anyways, and you might also find like, this can't be done, or it's just too hard, or oh my gosh, this is going to take way more money than we thought. But that's the other part that I think goes for anybody. Like, don't fear the process, because there's people like you that have been down that path. There's lots of founders out. There's lots of good advice out there for founders. I remember back in my banking days, somebody suggested, like, Tim, you should write a business plan and go start. I was like, what the hell is a business plan?
Yeah, right.
Because I remember I was engineering, so I'm like, what's a business plan? And it all sounded scary, and there was like fear of the unknown. I'm like, so what is this business plan thing
that you speak of? Yeah.
And how does one write one?
Yeah.
Nowadays people would probably laugh. Go Google it. But anyways, there's lots of great frameworks out there.
Far fewer business startups in 2002.
Oh my gosh, yeah. Back then,
entrepreneurship
now
was still code for unemployed.
Right?
I mean,
literally?
There was, yeah.
I remember, even when I moved back here, I was walking around like, oh, I'm starting a business. They're like, I'm sorry, when did you lose your job?
Yeah, you poor guy.
Which was all, kind of true. I quit my job to do this, but so whether you're ready to build a product or just start putting thoughts down on paper and start to figure it out. And the reality is you can look at the lean canvas or any other framework. It's like market, customers, pricing, financials, or you talk to folks like us and we can tell them, hey, go work on this a little more, or have you thought about this? And so it starts with kind of building the business model or the business plan and just starting to build a case for if a business is viable. And then once you have the conviction on all those pieces, start to build it, whatever it is.
So now I've built my prototype.
Yep.
And I've got my team of let's say 5 people or something like that, and it's 2 years down the road, and I've got 10 customers. Let's say I'm bringing in $1.5 million, $2 million bucks, you know, and now I approach you, and you help me scale.
Yeah.
So scaling, I think, is one of those things where people look at it as like this it's the pot of gold at the end of the rainbow. It's the point of the whole thing. It's like, this is where I want to be, but in actuality, it's terrifying.
Yeah.
So maybe you could talk a little bit about that. How do you make the scaling, the excitement of the scaling, but also the practicality of growth? Like, how does that?
Yeah.
Well,
a couple things. We actually invest as early as a 4-person. Our next investment that we just committed to is literally 4 people.
Okay.
So that's
just
on the small
hypothetically,
side for us,
yeah.
but we actually invest pretty early. If you had $1 million or $2 million of revenue, I'd be like,
you might not need.
you already did it. You might not. You might not need us. Most of the companies, we invest mostly in companies that have revenue, but a lot of times they're doing 5 or 10 or 20K a month of revenue.
Okay.
So it might be more like 100 or 200 grand a year of revenue. In today's market, that would be plenty of evidence of what they call product market fit. Like, product market fit means I can build the product. The market seems to care because they're paying me. So if you came to me with 10 or 20 customers and 100 or 200 grand of revenue, I'd be like, all right, it looks like you're onto something. Let's talk about this.
Mm-hmm.
Now, scaling is a great question, but scaling is not an end stop. It's an evolution. So what's going to happen is you build it. And then you're like, most time companies start with founder-led sales, which just means, you built it, now you got to go sell it.
Yeah,
right?
yeah, selling your darling.
Yeah, but that's usually the best way to do it. I actually encourage founder-led sales in the early days, because if you hire a salesperson, it doesn't work. It's like, well,
that can get
is
really
it
expensive.
Is it a bad salesperson or a bad product, or is it just positioned wrong?
And the lead time to find that out can be longer than it should be.
Yeah.
You got that what do you call it, the tickler file. You got 6 months of like, well, they're gonna call me back, and they never do, and
I mean, I think some founders just don't know sales, in which case you might want to add, like, one of those first 4 people might be somebody that can help with sales and marketing.
Okay.
But founder-led sales is usually a great way. And then what happens is, whether it's the founder, or, by the way, another good point, building a business can be really lonely. So we talked about it earlier. Having a co-founder is actually a great idea for just about any business, because otherwise, when you're sleepless at night and you're trying to figure things out, you're like, who do I talk to? And your dog doesn't talk back, and the spouse is tired of hearing about it. So having a co-founder, whether they're actually a co-founder or they're just kind of a partner in crime, is really important for any business. But again, it's iterative. So this is,
and make sure it's legit, like in paper and writing. Yeah. Right. Don't just have it be a handshake and a conversation. Yeah. Typically.
Yeah, that's right.
I've seen those go sideways.
Yeah, I mean, the good news is, like, you can set up an LLC for anybody that hasn't done it. Like, literally for $25 in the stroke of a pen, you could do an LLC in minutes. And there's lots of documents out there. VCs, we tend to invest in Delaware C Corps for a variety of legal and financial reasons that I don't even understand.
Taxes are different.
But you can start as an LLC, then you transition to C Corp once you're ready to raise venture. But yeah, it's good to get all that sorted and establish yourself as an LLC. But to answer your question, like the evolution of scale, it's an evolution. So if it's founder-led sales, what you probably want to figure out is, can somebody else sell this other than the founder? Because if you don't figure that out, I'm going to ask that anyways. So if it's working, then you're probably like, maybe I should hire a second salesperson. So you had a salesperson, and then you're like, well, God, we need better collateral. Well, so if you don't already have that person, you're going to want to either use a contractor. In our companies, usually if it's something that's important to the business, I think you should own it, because otherwise you have this, again, well, is the marketing material not good, or is the product not good? So anything that's critical, I think eventually you want to own, but you grow into that over time. So when you're ready to scale, a lot of times it's a matter of, actually, I love to see companies that have grown super far with just founder-led sales. They don't even have a marketing person. I'm like,
nice job, you guys.
If we, these guys got, actually there was a business locally. They got to $1 million or $2 million of revenue without like any trained marketing or salespeople. And I'm like, I said to the team after the meeting, it wasn't one that was a fit for us. I was like, if they actually just staffed this up, they could probably get to 10 or 20 million without even blinking, and they did. We didn't invest for a variety of reasons, but sure enough, like a year later, like, yeah, we're at 20 now, and I'm like, maybe we should have invested. Yeah. So, but it's not that scary. You're going to add marketing and sales. Now, there's a lot of nuances to like what order you do that in, what kind of marketing and sales leader, what practices and technologies they want to bring to bear, and we help companies with that. that's, but you'll hire people that have experience doing those things, and then there's sort of good, better, best, and depending on what you can afford and what stage you're at, and you're kind of leveling up to grow into that. Like a company with $100,000, we have. It's really proud. The portfolio is performing well. If anybody's watching, love you guys. The portfolio is crushing it. But most of these founders we find when they're still looking for product market fit. They're at 100. They're either pre-revenue or they're maybe a couple $100,000. And a number of our portfolio companies are now at tens of millions of revenue.
That's
so
wherever you want. Yeah.
That's where we can help as a VC because we know what that continuum and that evolution looks like. You don't need to jump to $60 million scale. You can't afford to.
Right.
Day one, but you sort of grow into it.
That's
time.
a funny way to put it because that's you not being able to afford to grow is the problem.
Yeah.
You get these huge sales and it's like, well, how do I do it? How do I complete the transaction with the thing that I just sold them? And
and
I think that can be real troubling.
Yeah, and I think that's another thing for founders or entrepreneurs to think about is you don't need to prove to me that you can get to 60. Show me that you can get to the next stage.
Right.
What I'm really looking for, again, market team, then looking for progress.
Yeah.
So the biggest thing you want to raise money, show me growth.
Yeah.
Show me that you started here, then you added a customer, next month 2 customers, next month 3 customers.
Yeah.
And maybe that time series is month 1 customer, next month 2 customers. It depends on what type of customer you're selling to.
Yeah.
But show me that it's starting to scale. And again, so the next, if it's founder-led sales, show me that if you add a salesperson, that person also can sell. Show me that you went from your MVP to a beta version, and from beta you got to be 1.1. And you see all these things they know how to build a product. They're evolving as a sales and marketing organization, and we know some of the playbook to accelerate those activities further.
So build the capabilities, the competencies, and then sell it.
Yeah, that's right.
So what are the different sectors? You already mentioned technology that you're interested in. Just broadly speaking, it seems that everybody's into apps still. Now there's, the futurists are into Web 3.0 with crypto and all that.
Yeah.
Do you think that it's a necessity to be on the cutting edge, or is it okay to, Jim or James, I guess he goes by, McRoot just did a snow plowing app, Snow Buddy, I think it's called. Yeah.
Yeah.
I call that a blue collar traditional kind of thing. Do you care? Is there a mix in there that you'd like?
Yeah, I think especially the first one, what I'd say is any great business or any good business, there's a source of capital for you. Venture capitalists, so the way it works, we start about how do you get into venture? I fell in love with it.
Yeah.
And I spent 3 years getting started. I was raising. So what happens is venture goes, we're set up as limited partnerships. We have limited partners in our fund. Those limited partners commit capital. So in my first fund, people are like, hey, yeah, Tim, I'll put $50,000 into your fund. The problem is if you're trying to raise $10 million, that means you need 200 investors.
Yeah, that's a lot of those.
There's actually a limit. I can't have more than 100 investors in a fund. So you cobble all this together, and I've got $10 million to invest.
Yeah.
And I'm looking for companies, but the goal is I need to turn that $10 million, if stock market returns 12 or 13%, we try and generate sort of 10 points better. So we're trying to generate a 20 to 25% return to justify the illiquidity and all those other things. So we're looking for things that grow really, really. This gets back to what we look for and what kinds of businesses we invest in. So we need things that can grow. Well, I look for a company that can grow 3x every year, that can triple in size every year, and that can, if I put in $1 million, the threshold, the minimum for us is okay, we think we can get $10 million back if we put $1 million in. What I'm really looking for is if I put $1 million in here, if things go really well, if things go close to perfect, this could return the whole fund. So the current fund is $30 million. So we invest in technology because that's where there's really lucrative valuations. And usually technology is something where, the app, you build it once, but 1 million people can use it. You don't need to build a bespoke app for every single snow plower out there. So there's, and on the current business, actually, that we've evolved to where we mostly invest in B2B software, so not many consumer apps anymore. We like B2B software for developers, finance, like I started in fintech back in my banking days, marketing technologies, and then healthcare is super fascinating given all the change in healthcare. But the end point of healthcare, think about what happened the last 3 years during COVID, is telehealth. So now like the consumer might still be holding an app to talk to a provider, and then they're checking their health. And the doctor, by the way, on the other side is seeing the conditions of the patient and making recommendations online. So there's a technology angle that enables it to be developed, deployed at scale, and to scale really, really fast. That's where we invest. But if there's a person out there that just says, I want to build a new snowplow business or just a new plowing business, like that's great, go for it. That's not the kind of thing that we invest in. But there's all sorts of great businesses, whether it's more of a lifestyle business or a retail business or technology. But we invest specifically in technology. And to the point of the plow business you saw, I didn't see it.
It just came.
I like businesses that they're almost like too simple. It just makes a lot of sense. You remember one of our Grand Rapids businesses was Sportsman Tracker.
Oh, I do.
And this is it was an app for hunting and fishing.
It was great.
And this started off as the founder came from a family of hunting and fishing guys, but he was a developer. And he's like, I need an app. I'm tired of waking up in the morning having to check 10 forecasts and maps and all this stuff to figure out if it's going to be a good day for hunting and fishing. I think I could build an app that would put all this together and basically tell me like thumbs up, thumbs down, should I be out in the woods today? And as an outdoorsman myself, I saw it and I was like, I've never had this, but I've needed this like my whole life. So I don't know if snowplow business app is a good idea, but some of them, and so Sportsman Tracker started as that. We literally talked ourselves into it with like we were all sitting around after fly fishing. We're like, wouldn't this be cool if this was for fly fishing? We sort of talked ourselves into it. People thought we were crazy when we first invested. That company got its first $25K from 5x5 night through Wakestream. And then they came to me 6 months later, and they had like 200,000 downloads. I'm like, what?
Great.
Like this company's down to 200,000 downloads. Again, having put Jeff was working on this on nights and weekends. So it was just kind of taking off. So same thing, interesting market, strong team. You had a developer that could actually do it. He went out and built the prototype or the MVP on his own on nights and weekends, put it out in the App Store. People start learning about it and downloading it like crazy. There's 5 years in between of growing it and trying stuff and all those things. But during COVID, not all things during COVID were bad. Everybody turned to the outdoors because there was nothing else we can do. So hunting and fishing and camping, golf, anything outdoors has been at all-time highs. So Sportsman Tracker, I'm not sure if you even saw this, but during COVID, Andreessen Horowitz, like the biggest, baddest fund in the world, published a report in the middle of like 2020 that said the fastest growing social apps. It was about like these social vertical communities, and HuntWise was one of the companies highlighted. Like our little Grand Rapids HuntWise was one of the fastest growing apps, and it was tripling like every year, tripling in size. So that's how it popped up on Andreessen's radar. And then once it hit that report, things started to get interesting in terms of investors and acquirers, and so ultimately it was acquired.
Yeah, that's what I thought. Yeah. Who ended up buying it?
It was a company. It's a company. I forget the name of it. It'll come to me. But they do all the kind of like youth hunting classes. So they looked and said, hey, we don't really have a digital side of our solution, but we're literally teaching like the next generation of hunters. They educate like thousands and thousands, maybe hundreds of thousands of hunters each year, and they're like, we could basically teach the next generation of hunters to use this app. And so they acquired HuntWise to become sort of the digital side of their business, but they have a bunch of other, outdoors related businesses.
Can you think of the biggest surprise, the most surprising thing that you've come across since going down this path?
For venture capital?
Yeah, like I guess maybe I don't know if this is fair to say, but the biggest misconception, I guess, perhaps, or surprise, or like, is it exactly what you expected?
First, the reason I'm laughing, I thought you were going to say this about businesses. Like, I've seen just about everything.
I would imagine,
like everything that you'd never think possible.
Right.
I've seen times
Twice.
10. Yeah, I've
10
seen
times 10.
times 10. So in terms of like surprising things about companies, I'm like, you have no idea. Like companies that, actually my team teases me because I get really excited about every business, and then 6 months and you're like, oh my gosh, this is never gonna work.
The cobwebs come out.
And then actually there's one right now that looks like one of our biggest fund returners. They're like, Tim, when we joined, you thought this was gonna be, it was going up in a ball of flames. And 12 months later, you were convinced it was gonna be $1 billion company. And now it is, or it looks like it's gonna be, it looks like it'll return our whole fund. So
Congratulations.
Thank you. Yeah. So I've seen lots and lots of surprises on that side. In venture, what surprises me? I'd say, like I said, that fundraising piece. I'd never been in sales. I had no idea how complicated it was to raise a fund. I also went about it kind of in some ways an unconventional route. A lot of Midwest funds probably come from like me. They've got an idea, and then they're sort of learning as they go. The more conventional way, if you were in San Francisco, playbook for anybody thinking about launching a venture fund, go get a job at Andreessen Horowitz.
Yeah, right.
Work there for 5 years, and then when you walk out of Andreessen Horowitz, there'll be somebody standing there with a check for $200 million that says, "Here, start a fund."
I bet.
That was not my experience.
It's a little different.
Yeah, my experience was much more just sort of grinding it out, like a startup, which I wouldn't change a thing. It's made me humble. It's made me appreciative. But raising the capital, it's so funny because, especially around West Michigan, you read about people and families giving away millions, tens of millions of dollars. And I could go to those same people. It was impossible to get meetings. But you get in front of them, you're like, would you invest $50,000 in my business? And they're like, I don't think so. And I'm like, you're giving away tens of millions of dollars. Wouldn't you like to generate a return and still have a meaningful impact? So there are lots of surprises like that. You'd think people have, in my mind, kind of different minds or different pockets. Like, this is my charity pocket, this is my investment pocket. And actually, even in West Michigan,
is 50,000 a large enough number?
No, but that's what I'm saying. It's like a rounding error to some of the people I'm talking to.
You got to ask for 500.
Yeah, I mean, nowadays most of our investors kind of start around $500,000.
Yeah.
And what's shocking, again, so there's a lesson for entrepreneurs. Like, don't be afraid to ask. I was scared to ask for 50 grand.
When really you should have been adding a zero.
Yeah, and now, I tell people, hey, the minimum's $500,000, and you'd be surprised. Now I have the benefit of being able to do that now because we have the track record and the results and all those things. So you sort of grow into it, but it was.
Do you think if you walked into those first meetings asking for $500,000, if it would have went better?
I don't know. I don't know. I mean, here's the thing. Back then, I didn't have a track record.
Yeah.
They could probably see the fear in my eyes. I'm like, oh my gosh, what am I doing?
If you could keep a straight face, it might have gone.
If I could keep a straight face. Yeah. If I'd look people in the eyes,
like. Yeah, please.
Right. So, what else has been surprising about venture capital?
I mean, that's a good one right there. The dollar amounts.
Yeah, fundraising was really interesting. The dollar amounts.
What have you learned? I mean, asking for money is always difficult. I don't care who you are, how long you've been doing it. When you hand that invoice over to somebody, or what have you,
That's changed too, though. I used to feel bad. Well, it's a couple of things. So during fundraising, I probably had 6 cups of coffee a day. It's like, hey, you want to grab coffee?
Yeah, right. Yeah.
And
it's 4 p.m., Tim.
Yeah, and everybody,
that's fine.
Everybody be having coffee with me. And I'd tell them about what I did and how I moved back and the fund. But I wasn't in sales, so I never made a clear ask. And they're like, so what do you think? And they're like, I think it sounds crazy. There's no way. So I had a big lesson learned. It was like, now, again, just aligning expectations. I'm raising, this is my story. Do you think you'd be interested in investing? And all of a sudden, my batting average went from 1% to 50%. Because everybody, before I ever sat down, it's like, I'm coming to ask you for money. Just so you know.
Yeah, right.
And that was a big difference.
And that helped.
Yeah, it helped. But also back then, I felt bad, like I was asking for a favor, and I think that's probably what, they didn't want. Again, there's the charity bucket and the financial bucket. Now I walk in, I only have a few spots left, so, and I'm looking for a certain subsector of investor, and at this point, I can kind of pick my investors at this point. So
because you're getting the returns.
Yeah, we're getting the returns. But the flip, I don't feel bad anymore because I'm like, listen, I'm gonna make you a ton of money.
Yeah.
I don't feel bad about that.
Yeah, why would you?
I'm offering you an opportunity to triple your money or however much you want to put in, and if it's the majority, close to the majority of people I talk to are like, yeah, I'm in. You know, they're like pre-qualified. It's a friend of a friend of a friend,
Sure,
and
yeah.
they already know what I'm doing. They're looking to get in a venture, et cetera. Yes, there's some lessons on the fundraising side. A lot of lessons on the technology side. I think our pattern recognition or understanding of how to build a business has gotten a lot better. But no, like, I'd say it's more just sort of steady improvement.
Yeah. When you're doing a new investment or whatnot, what kind of sectors or verticals are you looking to invest in?
Yeah. So I mentioned before that we like B2B SaaS. And you
Software as a service.
Yeah, software as a service specifically, and we like financial technologies, fintech, DevOps, IT is always hot, and we added a partner, Nathan Owen, that specializes there. Healthcare is so what you're really looking for is sectors that are experiencing massive innovation and really rapid change and growth.
Oh, that's a good way to
Yeah. So I mean, a lot of times people come to me and I'm like, there's just. The idea's already kind of played out. It could still be interesting, by the way. Like, just because it's not a fit for me doesn't mean an idea isn't good. I'm looking for businesses that can become billion-dollar businesses.
Yeah.
So there's lots of great businesses that just aren't a fit for me. But you asked the question about like Web3 and crypto. I have not. Crypto's one for me. I was like, it's never gonna work.
Oh.
It's never gonna work. And also like crypto's everywhere.
It's working.
It's working. So like my big focus as soon as I'm finding more free time, I'm actually investing more and more of that free time in Web3 and in crypto, just to see what it looks like. We're not going to jump in with both feet. I'm going to jump into learning it with both feet, but usually it's the new sector or category that generates the big winners.
Yeah.
So I think in anything, we talked about this also as a team, like highly technical, deeply technical solutions. I actually like to see companies that like half the team is engineers or PhD, like whatever they're doing, like they're developing kind of a secret sauce or a new approach that's 10 times better than whatever's out
Because
there
they know
today.
about the details and they're kind of found.
Yeah, and usually it's like I said, there's kind of a technological breakthrough or a paradigm shift. And
which
that's what
crypto fills that.
Yeah, which crypto fills
for
that
sure.
big time. So we have one company that kind of touches on blockchain. Actually, I've got one you'd like.
Go on.
So go on. Do tell.
Yeah.
It's actually a New York company, but it's called FairChain.
Okay.
So this one's pretty cool. If you think about books like publishing or music, the artists have always maintained royalty rights. If you think about Leonardo or like Da Vinci, like fine art, contemporary art, once you sell it, it's gone.
Yeah.
And so FairChain was created. It's a couple of things. It's sort of like a title registry to enable the secure transfer of art. So think contemporary art. But one of the big kind of double or triple bottom line things are like, this just isn't right for artists. An artist sells a painting for $500. 3 years later, it sells for $2 million at auction.
What happens?
And the artist is like, great.
Yeah.
So FairChain is a registry of art that ensures the safe kind of sale and transmission of art, but it creates a digital, and so it's built on Ethereum or Ethereum as in the blockchain to create this like this perpetual record of ownership, and so that every time the art is transacted, basically the artist can keep a residual or royalty rights to it. So they're a super interesting sector. So it touches on blockchain because they're using blockchain to create the perpetual record. And it's sort of fintech because it helps with the payment and facilitation and transfer of the art, but it actually touches on the artist community. So that was I guess you'd call it pre-seed at the time that we invested. It was pretty much pre-revenue.
You're a partner with
FairChain. This is one of our investments.
Oh, great.
So it's based in New York.
Great.
And one of the founders came out of sort of the art world, came from a longtime family of artists and galleries. And it was a PhD, computer science person out of Stanford. And so that was an investment. I think we completed that investment last year.
Oh,
it's pretty cool. Like they're kind of shaking up the contemporary art world. And others have tried, like some of the big galleries, like the
Saatchi.
Some of the big galleries have done their own thing like that. But it's pretty cool.
So when you say title, I'm assuming that you're referring to an NFT
probably,
Yeah, so,
right?
well, so it's like NFT, but NFTs typically, if not always, refer to like digital art. So this isn't like.
Well, you can have a title for an artwork be that, I would assume.
Yeah. So it's like NFT, but it's not like a digital token or a digital.
It lives in the real world.
Yeah, it's not a digital character. Like this isn't a painting that sits on your wall, but there's a huge, like all the movies you watch about like fake art.
Yeah.
Apparently that's real stuff.
Oh, it's a real thing.
It's a really big deal. It's a really big problem,
huge.
and counterfeit's huge. So like this is movie type stuff because it's millions of dollars. There's money laundering and all sorts of stuff that goes on around art. So yeah, FairChain basically, like now an artist can create a piece of work, they can register it in FairChain, and the document they enter like a smart contract. So this is the blockchain stuff that says if the art is ever transferred or sold, it has to be recorded in the blockchain. So this has this perpetual record, which means that whoever's buying it can confirm, who owns it and who should be selling it, and basically they document the transfer of that art.
Yeah, I mean, that's what I think most stuff is gonna move to. It's just I guess if the technology just fails, it won't work. Like Solana's crashed a couple times, and like there's this problem with Rarible and OpenSea, where if you bought it on OpenSea and you moved it to Rarible and then you moved it back to OpenSea, you could still buy it on Rarible for like the lowest price possible.
Yeah.
That stuff I think is gonna really, need to get worked out, obviously, but it's only a matter of time. There's some super smart people on it.
Well, so you know a lot about this. So go check out FairChain.
For sure. Yeah.
It's pretty cool. And there's others that have done so. This is not specifically developed for NFT.
Okay.
NFT is a little bit like crypto. I'm not sure I really get this. Like, who's spending thousands of dollars for a digital
monkey?
For a digital monkey?
Yeah.
Don't totally get it.
Yeah.
But this is more like think of your uncle who's an artist that lives in New York and has been painting his whole life. This is for those artists, and it can be existing works of art or new works of art, but FairChain's doing some interesting stuff.
Yeah, that's great. Yeah.
I bring that up because it's sort of an evolution. Like, we aren't going to stop carrying dollars and just switched over to crypto.
Oh, no.
And blockchain isn't going to pop up tomorrow and replace everything that's here, but it's a very practical use case of kind of makes sense. Like, why wouldn't you create this registry in the blockchain where it can't be changed and it's going to exist in perpetuity?
Yeah.
And then, by the way, because it's in the blockchain, the transfer and transmission of funds and all these other things is sort of seamless. So I think it'll be like that. It's going to be an evolution, but it's definitely the future.
Yeah, I haven't seen a technology this disruptive be adopted despite its flaws this fast ever. I mean, everybody compares it to the internet back in 2000, oh, nobody thought the internet was going to work out, and look at you now. And I think that a lot of people are drawing that corollary to crypto, and it's just like, it's working, it's got that, it's got that mass adoption, and it's like one of the only things that was started out as a global initiative. Like Bitcoin especially, it started out as global. Like Apple even, first one to hit $1 trillion, I guess, and now they're at $3 trillion or something.
Yeah.
They didn't start out as a global company.
Right.
And they're arguably the number one.
Yeah.
Where you have Bitcoin, they started out that way, and they still are. It's just like...
Yeah, like I said, I was skeptical for the long time because starting in fintech, I watched companies that were trying to replace MasterCard or Visa or the big banks. I'm like,
good luck.
You can't do it. Good luck. And even in the early crypto days, I don't really get it. And here's the thing is, so that's that's why venture capital exists, to make those long-term bets on stuff that could be world-changing. But I remember Fred Wilson at Union Square Ventures had been blogging about crypto for, I'm like, these guys keep piling money into crypto. I'm like, I just don't get it. But they were early investors in, Bitcoin and Coinbase, like all the ones now, there's like,
now they're on vacation.
Yeah. But I think they started in 2008. So they've been investing into crypto for over a decade. That's what blows my mind though, as you look at it. So I was a little bit dismissive. I just didn't really have time to fully understand it.
I was
the last 2 years, all of a sudden, it's it's
alive.
I think you can pay with Bitcoin at McDonald's. So it's officially here and it's officially mainstream.
Yeah, Apple just added it.
Did they?
Yesterday or the day before, they were announcing that you can't buy an iPad with Dogecoin or something crazy like that, but they're making it so you can use crypto across their Apple Pay platform. So theoretically, I believe I'm getting this right, you could use Ethereum or Bitcoin to buy a bagel at somewhere that accepts Apple Pay.
Yeah, that's right.
I think it's how it's working.
Yeah.
Which is just like, we're going to look back on this. I think we're going to look back on this and it's going to be like when the fast food chains started taking credit cards. You know, like back in the day, it was cash only.
Yeah.
And nowadays it's like, well, of course you can buy a McDouble with a credit card, you know, like of course. And I think it's gonna go. I already have a Coinbase credit card where all I got to do is get on the app and switch which token or coin I'm paying with, and it does it somehow through the stratosphere, and then I do my little card and it works. Yeah, it's amazing how fast. Yeah, it's been.
Yeah, and I think you're right, and that's sort of Moore's law type of stuff.
Yeah.
Like, it's accelerated over and over again. If I don't even remember the exact generations, but if Web 1.0 to Web 2.0 took 10 years, and Web 2.0 to 3, it's probably more like 20 years to 10 years. What that means is crypto and Web 3 will probably be here in 5 years. Crypto's already here, but like
2015.
Well, that's what I'm saying. Like it's happening faster and faster, and that's what'll be fun to look back at.
Yeah.
Like, here we were, screwing up the explanations and musing about this. In 5 years, like it'll probably be.
Kindergarten. Here's how you pay for your lunch, little Johnny.
Right.
Give me that Ethereum.
Yeah, it's definitely gonna happen.
So let's see. Words of wisdom. Any thoughts? Any parting words of wisdom that you know, to yourself or others? You know, getting going in the space.
Yeah, I hinted on a few of them before. I think if you've got an idea, like don't be afraid of it. Run towards it. Share it with others. You can't go it alone. Mm-hmm. Don't be afraid to make a change. I was 30-some before I figured out what I wanted to do in life.
Yeah, good. Yeah.
And then I kind of rolled the dice and risked it all to try it. Don't say you rush out and do that. Like, don't everybody quit your job like I did.
But still.
Or don't blame me if you do.
Yeah.
But don't be afraid of it. Kind of embrace it. Find something you're passionate about.
Mm-hmm.
I'm super blessed. I absolutely love what I do every day. But other words of wisdom. That's probably the best I can come up with right now.
Yeah. Yeah, don't be afraid at starting something new that you don't know 100%. And the passion sometimes will get you.
Yeah, in terms of kind of not words of wisdom, but surprises. Like we're all kind of making it up as we go. Yeah. And so you don't need to have all the answers, and you don't need to be scared. I think you need to embrace change, and it's probably words of wisdom for all of us.
Cool. Well. Thanks for joining us. Yeah, I really appreciate your time and your willingness to play along with the show.
Yeah, I love doing this, and to the extent that there are questions or follow up, we can do this again, or we'll create a little forum online to do some Q&A. But I love to, like I said, I love to encourage entrepreneurship and calculated risk taking and chasing your dreams. So to the extent, hopefully there are people out there that'll hear this or listen to it or watch it and like it, and we appreciate that, obviously, and to the extent that we can be helpful. Yeah, we'd love to.
Okay. Well, thanks, Tim. Thanks for joining.
Yeah, thanks, man.
Yeah, you bet.